Hello, dear viewers, and welcome to the final episode on the series GST in Pictures. We are in episode number 10, and we have covered almost all the basics of the subject of GST. Now, what remains to be covered in the GST is documents and forms under GST, which we are going to cover in this particular session. It will be impossible for me to cover all the forms under GST, but then I have made an earnest attempt to cover the very important forms that will really help us understand as to why it has been issued and what are the applications of that particular form. So let's look at the next part. What are the topics that we are going to cover in this particular session? We are going to cover the list of documents under GST, detailed insights into the relevance of each of the document, and various forms under GST and its relevance. Now, as we know, GST is a technology-based law. We say GSTN, Goods and Service Tax Network, we say. There is less interference or interaction between persons, and there is more virtual participation. Record of all the transactions are automated, whether it comes to payment of your GST amount is concerned, your refund is concerned, your electronic tax ledger, we say, your reconciliation is concerned, your matching of the receipts are concerned. Everything is done in a virtual mode. So there is absolutely no interaction at all between people. On some occasion, when there is an investigation, possibly at that point of time, there can be an interaction. Now, very, very important point, which are the documents that we need to discuss, which are very, very important and whose understanding is a must to understand this concept of GST. So documents like tax invoice, bill of supply, debit note, credit note, receipt voucher, refund voucher, payment voucher, revised tax invoice, and e-way bill. E-way bill is a very important document. We have actually discussed it in our earlier episode. So other than the e-way bill, we will be discussing all the other documents that are there on the screen. So we will be understanding what is tax invoice, bill of supply, what is the difference between the two. Now let's understand the documents one by one. The first thing that we are going to discuss is about tax invoice, which is covered under Rule 46. What is this tax invoice? Now, there are two kinds of registration a supplier can avail under GST. One is a normal registration, where he is going to pay input tax on his inward supply and collect output tax on his outward supply. So when the supplier is collecting GST amount in case of an outward supply, that is from his recipients, at that time compulsorily such a supplier will issue a tax invoice. So supply of taxable goods or services or both, at that point of time, tax invoice will be issued, and tax invoice will compulsorily contain what is the GST portion. You see another document right there, bill of supply, which is covered under Rule 49. I mentioned two kinds of registration. So if it's a normal registration, the supplier will collect and will pay input tax and collect output tax from its recipients or customers. When it comes to registration under composition scheme, that is under section 10, or if a supplier is not registered, meaning to say supplier cannot collect GST. If a supplier is registered under composition scheme, supplier cannot collect GST, because that's the very rule of section 10. Any person who is registered as a composite dealer or registered under composition scheme cannot collect GST. At that time, such a supplier for his outward supply cannot issue tax invoice. He would rather issue bill of supply. Suppose if the supplier is issuing only exempt goods, no GST at all, he will be issuing a bill of supply. So who can issue a bill of supply? So when there is a supply of exempt goods and services or both, when there is a supply under composition scheme, or if the supplier is not registered under GST, at that time, such a supplier will issue bill of supply. So the only difference or major difference between tax invoice and bill of supply is tax invoice will compulsorily contain the GST portion. whereas bill of supply will not show the GST amount at all because there's no question of GST when bill of supply is issued. Let's look at a document, an image of tax invoice, and let's understand each of the features of tax invoice. So this is the basic how a tax invoice looks like. What are the contents we have? First, we have the supplier's details, the name and address of the supplier, the phone number, we have the email ID, and also we have the GSTIN of the supplier. So the GSTIN of the supplier is also clearly mentioned, as you can see over here. The GSTIN, the invoice number, the year and the date, very important, date of invoice is also very, this is the invoice number that we have. This is the date of invoice or the date of supply, you can mention that. Then the second very important thing that we have is the recipient details with GSTIN. So recipient is also registered. Not necessary that the recipient has to be registered, but then if the recipient is also registered to claiming input tax credit, GSTIN reference is a must as far as tax invoice is concerned. Then we talk about details about goods. Then we talk about the HSN, the 8-digit code, the harmonized system of nomenclature. If it is goods and if it is services, it will be 6-digit service accounting code. Then we talk about the quantity and rate per unit of an item. This next we talk about the amount prior to discount, the total value pre-discount. Then you can see the discount portion is given over here, just an imaginary percentage, 2% is given. Then what you see next is the amount, the two amounts over here recorded as CGST 2.5%, SGST 2.5%. That is actually the GST amount. And if you see, the supplier is from West Bengal, the recipient is also from West Bengal. So it's an intra-state supply. So CGST and SGST. It's a 5% second schedule item, the item that is specified over here. That's why it will be, the GST amount will be segregated into CGST and SGST 2.5% each. And this amount which you see 3,43,000 which is available, that will be taxable value of supply or the transaction value that we have. Now, very important difference which I had discussed just earlier before looking at this image was the difference between tax invoice and bill of supply. Bill of supply will contain everything except the GST amount. Except this particular portion, the GST amount will not be shown in the bill of supply at all. That is a major difference. Understand this. So both can be registered, both can have GSTIN, but one may be a composite dealer. At that time, suppose if the supplier is a composite dealer, there is no question of collection of GST at all. So this is about tax invoice and the difference between tax invoice and bill of supply. Let's look at the next very important document, that is receipt voucher. Now, when is receipt voucher issued? Very, very important. When the recipient is making an advance or paying advance, the supplier is going to issue a receipt voucher, and that is covered under Rule 50. So on receipt of advance payment for the supply of goods and services or services, a receipt voucher will be issued by the supplier. Next, as the name suggests, Rule 51, which covers refund voucher. Advance amount has been received, but the supplier has not been able to either supply goods or provide services. So in that case, the amount will be refunded. The advance payment will be returned back. So given to the person who had made the advance payment, but no supply of goods and or services was possible. So in that case, the supplier will issue a refund voucher to the recipient. That is returning the money back, we can say. Next, we talk about a very important voucher called payment voucher. This is covered under Rule 52. Now, what is this payment voucher? We have discussed about the concept of reverse charge. Supplier is not registered. Recipient is registered. So supplier cannot collect GST. So it is the recipient's responsibility to deposit GST with the government. If it's IGST, the total amount with the central government. If it is intra-state supply, half of the portion half of the GST with the central government, half of the GST with the state government. And also, such a recipient will issue a payment voucher to the supplier. So a registered person, basically a recipient, who is liable to pay tax on the reverse charge basis. So normally the recipient pays, because in a normal circumstance, it is the supplier who is supposed to pay GST amount under forward charge. So when there is a reverse charge, it is very, very clear that it is the recipient who is registered, and the recipient will issue a payment voucher at the time of making payment to the supplier, that indicating that I am going to pay GST under reverse charge basis on behalf of you. Since you are not registered, since you have not collected GST, I will deposit GST amount instead of you. So a payment voucher is provided by the recipient to the supplier. Next, we talk about a revised tax invoice. This is a very, very interesting concept that we need to understand. A registered person pre-registration, that is before registration, but after he has applied for registration, still he has not yet received the registration certificate. A person is registered before registration, but he has applied for registration, and during that particular point of time, if there is any supply happening, after receiving registration certificate, to all the transactions that had happened after application, but till the receipt of registration certificate, so all such transactions to all such recipients, it is the supplier's responsibility to issue revised tax invoice. So has supplied goods or services, but invoice is issued after obtaining registration for the intermediate period supply. Let's take an example. If a supplier makes an outward supply from 1st June to 15th June, but registration certificate is obtained on 16th of June, that means quite a few transactions have happened from 1st of June to 15th of June, but registration certificate is received. That means he has already applied. Registration certificate is received on 16th of June, which becomes applicable from the beginning of the month of June, that is from 1st of June. So for all the transactions that has happened before registration, but after applying for registration, that is from 1st of June to 15th of June, for all such transactions, the supplier will have to issue revised tax invoice to all its recipients. And that revised tax invoice must be provided within 1 month from the date of receipt of the registration certificate. So if he has received the registration certificate on 16th of June, within 15th of July or 16th of July, for all such transactions that had happened before registration, no GST is collected. Now GST will be collected and a revised tax invoice will be issued to such customers or clients or recipients, we can say. So if a supplier makes an outward supply from 1st June to 15th June, but registration certificate is obtained on 16th of June, whose applicability is from 1st of June onwards, that means he has to collect GST amount from 1st of June onwards. So whatever transaction that has happened between 1st to 15th, he has not collected GST because he was not registered, will now have to issue tax invoice, revised tax invoice for that intermediate period. That is for all transaction between 1st June to 15th June. And it should be done within 1 month from the date of receipt of registration certificate. That's about revised tax invoice. Next, we will talk about two more very important documents that we have, and that is debit note and credit note. Now, what is debit note? Now, this concept of debit note actually is borrowed from the subject of accounting. See, debit note in accounting is when the business is returning goods back to the suppliers. A debit note is issued. Goods may be returned because it is damaged, not of the specification, not of quality that was expected. Many reasons may be given. So when the goods are returned by the business to its suppliers, business may also, along with the goods, will issue what is called as a debit note, informing the supplier that his account has been debited in our business's book. His account has been debited. That means he is a debtor for something. If he have paid some money, if it's a cash purchase, that means we are issuing a debit note indicating your account is debited. You are now a debtor. You are liable to pay to us because we have returned the goods back to you. Similarly, in case of GST, where a tax invoice is issued and the amount of GST which is collected is less than the actual amount. Suppose the business was supposed to collect a GST of say 12,000 rupees. Business has collected only 12,800 rupees. So business will issue, or the supplier will issue, a debit note to the client, recipient or the customer, inform the recipient that his account is debited in the business's book. Now, what is this debited? you are liable to pay 2,200 rupees. That shortfall of GST you need to make good. That is what the debit note is telling the recipient. So when less GST amount has been collected than the actual amount, then debit note will be issued by the supplier. Then what is this credit note? In accounting, customer is returning damaged goods or goods not of quality to the business pack. Business checks whether the goods are intact, are perfect. And if yes, business will issue what is called as a credit note to customer, informing that their account has been credited in our business's book. That means we have to pay to you. Business has to pay to its customers. Similarly, in case of GST, if a tax invoice was issued and GST amount charged was excess, that for that excess GST amount charge, the supplier will issue a credit note to its customers, to its recipient. So where a tax invoice has been issued and the taxable value or tax charged in it is found to be more than the actual GST amount or actual taxable value, then the supplier will issue a credit note to the recipient, informing that your account has been credited in our books. Business or the supplier has to pay to you because we have collected more GST amount from you. So in that circumstance, a credit note is issued to the recipient. So these are about the documents under GST. Coming on to the last very important concept, that is forms under GST. Now, as far as forms under GST is concerned, you see a number 173 written below, meaning to say there are 173 forms under GST. It is physically impossible, humanly impossible to discuss all those forms. And there are categories of forms. For example, as far as GST registration is concerned, there are around 30 forms. As far as composition scheme is concerned, there are around 8 forms. As far as return forms are concerned, there are around 22 forms, each indicating by a unique name. GSTR indicates returns form. In bracket, whatever number written is the number of forms that are there. Then under composition scheme specific, there are 8 forms by the name GST CMP. Then we have registration forms, as I just mentioned. There are 30 forms under the name GST REG. Then we have input tax credit specific, that is GST ITC. 4+1 forms we have. Then we have enrollment related forms, 2 forms in all. GST ENR is the indication of that form. Then any person who wants to practice, a commercial tax practitioner who practices GST, will have to fulfill or complete these forms and submit it online. Practitioner specifics, there are 7 forms under the name GST PCT, indicating practitioner. Then we have payment related forms. There are 8 in number by the name GST PMT. Then we have refund related forms, 14 forms in all by the name GST RFD. Then we have assessment related forms, 18 in number, GST ASMT. Then we have audit related forms, 4 in number, GST ADT. Then we have advance ruling forms, which are 3 in number under the name GST ARA. Then you have appeal specific forms, 8 in number, GST APL. Then we have transitional specific, transit, moving from GST to composition to normal scheme. There are 2 forms, GST TRAN, TRAN. Then we have EV related forms. There are 6 in numbers under the name GST EWB. Then we have invoice related, only 1, GST INB. Then we have inspection related form, 5 in number, GST INS. Then we have DRC, demand and recovery related forms, that is 28 in number under the term GST DRC. And we have compounding related forms. When the supplier or recipient has committed an offense, a mistake, at that time, their liability will be compounded. And there are 2 forms under the category GST CPD. So when you add up all these numbers over here, you get 173 forms under GST, which is slightly difficult to explain in one go. So what we are going to do is, we are going to cover only 3 headings. We are going to cover the returns form, not all important ones, composition scheme, all 8, and a few forms under registration. So let's look at the return forms under GST. So the name as a GSTR, R indicates returns. 1 for outward supply. GSTR 1A for auto drafted outward supply. GSTR 2 is for inward supply. GSTR 2A is for auto drafted inward supplies. Then you know very clearly that as far as normal registration is concerned, the registered dealer has to file returns on a monthly basis within the 15th of the next month. and that will be done under GSTR 3 form, monthly return. Then GSTR 3A, a notice is sent by the department for not filing returns. Then GSTR 3B speaks about summarized details of supply, outward supply, inward supply, your input tax credit claim, your tax liability, your taxes paid, everything. Comprehensive, complete details is given or should be given under GSTR 3B. Then GSTR 4, it is filed by taxpayers who have opted for composition scheme. So those who have opted for composition scheme need not fill GSTR 1 to 3B. They need to fill GSTR 4. Then GSTR 4A, this is auto drafted for composite dealers. Then GSTR 5 is for non-resident taxpayers. GSTR 6 is to be filed by ISD, that is input service distributors, for distributing of input tax credit. Then GSTR 7 to be filed by persons who are required to deduct TDS, tax deducted at source. So if you are a supplier who is supposed to deduct TDS, then GSTR 7 must be filed by such dealers. GSTR 8 must be filed by the e-commerce operators. Then GSTR 9 by annual returns filing, for annual returns filing. So returns has to be filed annually as well. So 9A is for annual returns of composite dealers. Then 9B is for annual returns to be filed by e-commerce operators. Then we have GSTR 10 filed by taxpayers whose registration is cancelled. For any reason, the reasons will be given in that. And GSTR 11 is to be filed by such businesses or organizations which have been issued UIN, that is unique identification number, usually issued to the embassies, to international organizations which are operating in India and who have paid input tax. They can claim a refund of their input tax that they have paid to any of the suppliers by filing GSTR 11, unique identity number. Let's look at composition scheme forms. There are 8 in number. First one is GST CMP 1, one who would like to migrate to composition scheme. So anyone who is moving from normal scheme to migrating from normal scheme to composition scheme has to fulfill or fill GST CMP 1. Then CMP 2 is for making the government aware that we are opting for composition scheme. Then CMP 3 is for intimating how much was the amount of stock on the date of opting for composition scheme. Point is simple. When we are under normal scheme, we could have claimed our input tax credit. But once we are moving from normal scheme to composition scheme, that means no question of collecting GST, no question of input tax credit. So what is the value of stock that is there? That information needs to be given under form GST CMP 3 is compulsory for those who are migrating from normal scheme to composition scheme. Then GST CMP 4 for opting out of composition scheme. If we are moving from composition scheme to normal scheme, at that time GST CMP 4 needs to be filled. GST CMP 5 show cause notice which is issued to the composite dealer. If there are certain reasons for which notice has to be served on a composite dealer, that will be done in this particular form. Reply to the no show cause notice will be given by the composite dealer to the authorities under CMP 6. Then rejection or acceptance of that show cause notice, that is reply, rejection or acceptance of the reply to show cause notice, that will be done under GST CMP 7. And finally, GST CMP 8 to be filed by every taxpayer who has opted for composition scheme in this financial year. So GST CMP 8 will be filled only once in the first year as a composite dealer. So second year onward, GST CMP 8 need not be filled. Let's look at the last set of forms, registration forms under GST. As I mentioned, there are around 30 forms, but it will take around 9 to 11 forms only. So GST registration 1, that is application for registration. REG 2 is for acknowledgement for registration. REG 3 is for if any additional information is required, clarification is required, add-on information is required, then the in an online mode, GST registration 3 will be available on the site of that particular applicant for asking for more information. Then GST REG 4 will be for submission, replying to REG 3. What was the additional information required? Just filling all those details. Registry REG 5 will order of rejection of application. Why application has been rejected, reasoning will be given there. So GST REG 6 will be the issue of registration certificate. That means you are now a registered dealer. So registration certificate will be issued. REG 7 is for application for registration as tax deductor at source or tax collector at source. So if you are going to deduct tax at source or collect tax at source, it's compulsory that such dealers must fulfill or fill GST registration REG 7. Then GST REG 8 is the order of cancellation of GST REG 7. If you no longer want to continue a deductor or a collector of tax at source, then REG 8 will be filled and order of cancellation will be issued. Then REG 9 will be application for registration as non-taxable resident person and casual taxable person. So casual taxable person, any person who goes to another state and does business for a temporary period, but he has no registration of that state. So temporarily he will obtain a registration and do business for a limited time. Such a person is called casual taxable person, and such person have to obtain or fulfill GST REG 9, and also non-resident, not taxable resident person, that is was situated outside India. Then GST REG 14, that is the application for amendment in registration particulars. So if you want any change to be done on the profile of your registration, your mobile number, your address, your email ID, any such details, changes are to be done, then GST REG 14 has to be fulfilled and should be submitted online. Then last one is GST REG 29, that is application for cancellation of registration of migrated taxpayer. So if from a normal scheme to composition scheme or composition to normal scheme, the change that has happened, migration has happened, then REG 29 has to be filled and apply for cancellation of registration. That will be done. So these are a few important forms. So we have covered the returns form, we have covered all the composition forms under GST and a few registration forms under GST. So that's all we have in this particular session. I would like to thank you for your patient hearing throughout this 2+10 part series of GST in pictures, because before we started with GST in pictures, episode 1, we have had a session on GST trailer, and we also had how the concept of system of GST works. So 12 videos we have on GST. So throughout this time, you have been very, very patient, and you have been very encouraging by giving your comments in the comments and feedback in the YouTube channel. So still, if you would like to connect and collaborate, my email ID and my number. And before I leave, I would like to share another very important information. More or less, we have covered the basic idea of the GST law. Next, I'm going to come out with a 2-part series on customs duty decoded, part 1 and part 2 very soon. And I hope I will get the same kind of encouragement that we have received all throughout as far as this episode or series on GST in pictures is concerned. So thank you for your patient hearing, and hope to see you all very, very soon. So thank you once again.